This podcast is for informational purposes only and does not constitute legal, tax, financial, investment, or business advice. Always consult with your professional advisors before making decisions related to your business or a transaction. The host of this podcast and Mark Martinez have an existing professional relationship. This episode is not a testimonial or endorsement of the services provided by the Mitchell Williams law firm or Mark Martinez. If you're thinking about what's next for your business, remember, the best outcomes are built well before a deal ever happens. All right, welcome to Owner, the podcast where Northwest Arkansas business owners learn how to build value, prepare for transition, and understand how deals actually get done. This podcast is sponsored in part by Transworld Business Advisors of Northwest Arkansas. Your business may be worth more than you think. At Transworld, we help you prepare, value, and sell your business the right way. Visit us at tworld.com/NW Arkansas. Mark, welcome back.
Thank you so much, Cam.
Yeah.
Miss it.
Yeah, for those of you who weren't with us on the previous episode, Mark Martinez is part of the Mitchell Williams law firm, and we've been really diving into the ways that you should be thinking ahead about a deal transaction and then how to think about it as you go through it as well. So a little bit about Mark. He's an attorney with Mitchell Williams here in Northwest Arkansas. Mark works with business owners, families, and successful businesses on tax, business, estate, asset protection, and wealth planning matters. He brings a valuable perspective on how legal planning, deal structure, and long-term wealth planning all come together when an owner is thinking about transition. So again, like we mentioned at the end of the last episode, we're going to dive deeper into wealth, succession, and life after deals. And we'll just dive right in, Mark. For owners whose business is their largest asset, and in most cases, what we find is that for most owners, at least 80% of their wealth is tied up in their small business, whether they realize it or not. How should legal and estate planning fit into the transition conversation?
Yeah, I think to your point, you're seeing exactly what I see, which is if you're a business owner coming in the door, your business probably has been thriving. So having it be 80 or 90% of your net worth is understandable. Mm-hmm. It might be a little risky, but also you've done it successfully. So why would you go elsewhere, right? It's different. I have clients come in that have 80 or 90% of their wealth in Walmart stock. Yeah. Maybe that's a discussion where we should probably diversify a little more because you don't have direct control. Yeah. But then again, I can't question them because the Walmart stock's been doing pretty good.
Yeah. So I'm doing pretty good.
So that's been pretty good. But I think for clients that are that have these businesses, have these assets, I think they need to understand that their personal world is really a business in and of itself, right? So just like in a business, if you had a very valuable asset, you would be very careful to take any decisions, whether you're going to dispose of it, if you're going to buy a new one, how you handle that asset. Well, in your personal life, which really governs everything we do, even within the business indirectly, the business is the same thing, right? So you should look at it like whether it's your operating business or whether it's some passive investments you have, each of those should be handled decisions should be made in the same way that you would do so for a business asset. So, yeah.
What I've seen, and this often happens with folks who are coming out of corporate America that want to become small business owners, which is probably the largest number of people starting their first new business, at least right now, is coming out of that cohort of people coming out of corporate America. And one of the mental shifts that they actually need to make is they're no longer an employee. And a lot of times they look at their small business that even though they're the owner, they're taking a certain amount out of it and then they're handing it over to their family. And so they do make those planning decisions completely separately. Like, this is what I'm taking out of the business. This is what I have to work on, rather than looking at it holistically as the owner and thinking about, okay, this is part of my portfolio.
That's right. Yeah, that's exactly right. And sometimes there's a lot of overlap between the way the family and the person interacts with their business. Sometimes it's literally just a silo in and of itself, right? That has to be managed correctly, but separately from everything else you have going on.
Yeah. So what planning should happen before a sale if the owner wants to protect wealth, provide for family, reduce conflict, or in some cases support multi-generational goals?
Yeah. So I'm a tax lawyer by trade, as well as the business and estate planning. So first and foremost, I look at, tax planning. the purchase price is almost going to solve itself, right? There's not a whole lot that I am going to advise you on that's going to affect the purchase price, other than cleaning it up, making sure that you're putting your best foot forward, right? Your quality of earnings, everything looks good. But if overall the business itself is valued in the market at $15 million, that's not going to change a whole lot based on the planning that we're going to do. However, how the taxes are treated can change significantly. And I mentioned this in our last episode, right? But using that same $15 million business example, if you structure it correctly, it could be $2, $3, $4 million of difference versus if you had not planned correctly. So, so that's one element, and I think that's a really big one, because at the end of the day, that's the bottom line, right? Is money going out the door. And so a good advisor, and frankly, a lot of clients see that, right? So it's not really it doesn't open their eyes too much. In the initial discussions when we're getting it set up, their eyes will kind of bulge out when you say, okay, well, I can save that much if I do this correctly. Great, let's do that. But by the time you get to the point of actually selling your business, that's a discussion hopefully you've already had, whether it's with your attorney or with your CPA. But that's still a really, really big one, because that's dollars in the bank. Charitable intent. I have a lot of clients who, they give to their church regularly, or give to the community. But now that they're about to cash out, they feel personal, moral, religious, ethical, whatever the reasons may be, they want to give a portion to charity, to their church. And you can do that. But if you were to take, let's say, $1 million, and you say, I want to give $1 million to my church, once this business sells. You sell the business, you pay the tax on that, and now you're giving with the $1 million with post-tax, after-tax money. Alternatively, if you plan correctly, you can actually give that $1 million worth of business interest to the church before you do the sale. And now it's pre-tax money. So you're talking about a difference of 20, depending on the total taxes that are hit, 20 to 30% savings that either way, the church is getting the $1 million.
That's right.
That's really just money out of your pocket. It costs you more to have done it with after sale money.
It almost feels like you're getting taxed to do the right thing.
Absolutely. So, if that's something you want to do, again, make sure you discuss that with your advisor, right? Because you can plan for that and do that the right.
We talked a little bit in our last episode, the role that emotions play in transactions. And I think one of the things you just called out is really important. Often what we see is the first time we sit down with a client and we start talking about the potential sale of their business, it hits home for them for the first time that this is actually real, because that's their baby, and they're feeling like, okay, this is the end of something, and they tear up and they get emotional. And so a lot of times just dealing with that emotion is important. But you bring out another perspective of emotion, which is you realize that there's going to be this liquidity event and you have the opportunity to do good in the world. And that emotion in and of itself can cause you to possibly make rash decisions that if you made them in kind of a more methodical, thoughtful way, you can still do significant good for the world without causing yourself some undue pain.
That's right.
Yeah,
that's exactly right. These are good problems to have.
Yeah, they are.
Clients, right?
They are.
These are problems incurred by having a lot of liquidity, a lot of wealth. But you can still get better overall results if you plan accordingly. So beyond the charitable, there's asset protection and trust planning, right? Before you had a business that nobody really knew the value of, but now you sell a business, it might be a public event, people know that this has occurred, you've got $15-20 million liquid sitting somewhere. Well, let's talk about how to protect it, right? Asset protection is a fundamental part of my discussions with clients from the moment you walk in the door. Is let's protect the business, and then once you protect the business, let's make sure we protect the proceeds, not just for yourself, for your spouse, for your kids, for their kids, right? So if that's going to be part of what we do, then maybe we create a trust structure, right? Or another entity just to hold the investments. Right. These days you can get asset protection for pretty much every asset there is. There are different levels, right, of asset protection. There's some that's rock solid, nobody's ever going to touch it. And then there are some that this is really good at a minimum, gives you settlement leverage if you get sued, right? Yeah. So that's a big part of what we're going to do. If you have a taxable estate, which if you have over $15 million in assets, if you're married, you technically get 30. But if you have over a taxable estate tax planning becomes a big deal. you have a business right now. If you're a client, you've got a business, and let's say you're taxable, which is again great problem to have, and you've got a business that's worth $20 million. Well, or at least you have a good idea that you can sell this business for $20 million. However, before it sells, you can get a valuation on that business, and the pre-sale valuation will inevitably be way less, far less than the actual sell price. So if you can take a business, get it valued, let's say you're in 2026, you get it valued at $10 million.
Right.
It's really not very unlikely. So $10 million, use up some of your exemption, you move out that business outside of your estate into a trust that can benefit your spouse, your kids, even yourself. Here in Arkansas, you can create a trust that benefits you. But you're moving it out, you're using up $10 million of your gift tax exemption. Well, then a year later, you sell it for $20 million. All of that $20 million comes into this trust that it's outside of your estate. It'll never be part of your taxable estate. So if you die the next day, you saved $4 million in estate taxes.
Wow.
I know the math gets a little weird there, but talk to your advisor. But all that growth, everything that happens, and really that's a discussion you can have even before you're ever thinking of selling it. If you've got a business that's just going to the moon, right? And you can get it out of your estate for $10 million, and then you sell it 5 years later for $100 million, which I have a client that's happening to right now. That's $90 million that's outside of their estate. That's $36 million that if they were to die tomorrow, they've saved on estate taxes. So estate tax planning is a big deal, especially if you're a business owner. A lot of times they'll come in, they don't even realize that they're worth what they're worth, because to them, they've been getting good income and revenue streams from their business. They don't realize it because of the EBITDA and the multipliers and all that you can actually sell your business for $20 million.
Right.
You have an estate tax problem. Right?
A good problem to have, but one that is a bigger problem if you don't even realize it till the last minute, because it's really hard to plan when the deal's closing. That's just the wrong time. So what mistakes do successful business owners make when they treat the business sale as only a transaction instead of the broader wealth plan? I think that's something we were just talking about.
We did. So focusing exclusively on the purchase price.
We talked about that last episode too.
Exactly. So we don't want to do that. But the estate planning and the tax planning that I was just kind of walking through, those are, even if we just want to focus on dollars and cents here, those are significant dollars and cents impacts. For sure, focus on that. Family dynamics, right? We talked earlier about, or I guess it was on the last episode, we talked about how these days less and less family businesses are truly passing down the family. But it's a discussion you need to have, right? You need to view the entire family and the business and your asset. The family office is what I call it. View it holistically, because you may not think that your family wants anything to do with it. Maybe they do, right? Maybe, or at the very least, maybe they just want to be an owner in it. And you would be okay with that. So these are discussions you need to have. Maybe not if your kids are, 8 years old, right? But if you've got a 40-year-old son or daughter or 50, and this is something that they want to be to participate in, and it doesn't materially affect the bottom line, ultimate bottom line for you, that has to be integrated into the overall planning.
And this is where, when you're thinking about equity in your business and what ownership you want to retain if you're selling your business, or again, if you're handing it down and they really don't want to be the decision makers in the business, they just want to be maybe have a voice now and again, or just keep a finger in that business. Maybe it's got your name on it or whatever. Those conversations need to happen in advance, and then they need to be part of the estate planning.
They do. And I mentioned earlier it's kind of redundant here, but the asset protection has to be an important part of the discussion. And that would be the case whether you have the business or you don't, right? Once you have wealth, it's worth protecting, right? The wealth itself is a business, because the wealth, if you've got $10 million and you're earning 5%, you can pretty much live off of that for the rest of your life if you wanted to.
I had one other question for you, but I think we've covered it, because, we've talked about what the business owners need to consider. But let's say you've got a business owner that started the business 15, 20 years ago. How often do you recommend that they actually come back and revisit those decisions they made?
Well, see, you keep asking me these great questions. They could be podcasts by themselves. So I refer to the type of advising and structure structure of the family office and everything else that we discuss with the clients as a virtual family office.
Yeah.
Okay. Because I think that's the approach, the best approach, the efficient approach for clients to get the best out of their business structuring and their family wealth structuring. So what do I mean by virtual family office? If you are a mega wealthy person, right? If you're talking about the Waltons, right? Or Bezos, right? You've got a single family office, meaning you literally have a business that's created just to serve the family. That business probably certainly has an accountant. It has an attorney, probably a couple of attorneys, right? An estate planning attorney, a business attorney, financial advisor, just an entire a company that literally just focuses on taking care of things for the family. If you're not that type of mega wealthy family, you probably don't have that first. You can't really afford it. And these things cost $2 to $10 million minimum a year to run. So you have more fragmented services, right? You may have a really good accountant. You may have a really good attorney, a really good financial advisor.
Right.
But maybe they don't talk as much as they should. To me, that's a problem. I say to me, really, just from my observation and all my time doing this in this area of the law, that's a potential problem for blind spots, right? I mentioned in the last episode, I had a client who had made a certain decision with their business that caused them not to qualify for the qualified small business stock exclusion. And that was a situation where their accountant did not speak with the attorney that was doing that switch.
Yeah.
Had they had open communication, they would have said, hey, the attorney would have said, hey, listen, accountant, I'm looking at doing this, or vice versa. And the accountant say, okay, great. Let's make sure we do it this way instead of this other way that does not qualify.
Right.
So having that integrated communication with all the various decision makers, or not decision makers, the advisors in the room, that's important. And so the way I work with pretty much all clients, I have very few transactional clients where they just come in and do something and go. Most of them are relationship clients.
Right.
We will have at least an annual meeting. So to get to the long story, the short answer to your question is at least annually.
Right.
You want to have a meeting where you have all the advisors in the room. These days with technology, you can do it by Zoom call if you want to. But ideally, just get everyone in the room so we're all comfortable with each other. Talk about the changes in the business since the last time you met. Potential changes for the future that might include possible pre-sale planning. Talk about changes in your personal life, right? What has changed that might affect the planning that we're doing, at least on an annual basis, so that everyone can make sure that everything's just tightened up, that we're planning correctly, and then ideally, and in most situations, it's more than annual, right? It's at least semi-annual, usually at least quarterly.
Right.
But any time that a strategic decision or opportunity arises, excuse me, we are getting on a call or having a meeting where everyone gets in the room and we say, okay, great. Here's this opportunity that's come up or an issue that's arisen. Let's look at where we need to either pull money from or move assets around. Let's look at your entire picture of, here's your personal assets. Here's your holding company. Here's what the business structure looks like.
Right.
Here are these trust structures that we set up. They've got $1 million or $2 million in liquidity.
Right.
Let's talk about where these funds should come from or where should we borrow the money from. Right.
Yeah.
Taking into account the asset protection, the tax ramifications, the way it affects the business.
Yeah.
Yeah. So long story, long answer.
No, but I think what will probably really resonate with a lot of people listening to this podcast is this whole idea of having a family office, and that's even available to them, knowing that they're not mega wealthy. And you hear about family offices, and everybody thinks, "Wow, that would be great if I ever aspired to, to be that wealthy."
Sure.
But actually, you don't have to be that wealthy for it to work for you. And if you have the right attorney who understands how to do this, and you have the other right advisors around you, then you can actually do the same thing that those mega wealthy families do, and you can get that value just like they do.
Yeah, I think that's exactly right. It is more than having the right attorney. To your point, you do have to have the right advisor, the right wealth advisor, financial advisor, business advisor, accountant. There are a lot of really good professionals in each of these fields that do not really take as much of a collaborative approach as maybe they could.
Right.
And so I think if you are somebody who values that virtual family office structure, then that needs to be an important discussion you have with your advisors. Yeah. There are several out there, right?
Yeah.
But this is not exclusive to me.
Right.
But there are several that are not.
Right.
So just make sure you've got the right advice around you, advisors around you.
Yeah. It definitely pays off to vet those people that are surrounding you and make sure that they understand the value of that collaboration as well. If they just want to be transactional, they may not be the right one for you.
Yeah.
Yeah.
And there's a difference between legal advice and legal work, right? As I
Right.
mentioned, I think in the last
Yeah,
episode, right?
you did.
You can get legal work. I mean, whether I like it or not, ChatGPT can do a lot of legal work these
Legal
days.
Zoom does a lot of legal work too.
Exactly,
Yeah.
right.
Yeah.
But the legal advice, you're not going to find on ChatGPT or legal Zoom.
Right.
I mean, you can get general advice,
Yeah.
but proper legal advice in counsel, and even the tax advice in counsel, you have to have a team of advisors, not just a team of people that can knock out the paperwork.
Right. Yeah. That's a really good distinction. And that's probably a great place for us to wrap up the conversation. Mark, that's been fantastic. Before we close, we're actually going to cover, like we usually do at the end of every episode, some of the newsworthy, noteworthy things that are happening in Northwest Arkansas that our small business owners should be thinking about. The first one for this episode is the Northwest Arkansas Council has hired the founding executive director of a new regional workforce initiative designed to connect employers, educators, and community partners. The effort will focus on training, internships, and apprenticeships aligned with expected regional hiring needs. And, one of the things that stands out here is that with long-term ownership, you need to be thinking about succession, yes, but also talent development. And knowing that this is something that is being really emphasized in Northwest Arkansas by the Northwest Arkansas Council means that you don't necessarily have to scour the whole country to find great talent. We can be developing that talent right here.
Yeah, that's exactly right. And I think there's a demand. I see it from my perspective. I'm sure you see it. There's a demand for qualified and capable talent. And if we can develop it here locally, even better. There's a lot of brilliant people here.
Yeah, I think these next two kind of news updates kind of highlight that as well. The next one is the University of Arkansas has joined a new Mid-South research consortium focused on practical uses of artificial intelligence in supply chain, healthcare, agriculture, energy, and workforce development. And without a doubt, the advancements in AI and robotics are going to impact every business. Maybe not the exact same way, but understanding how those technologies are going to impact your business and therefore what your employees need to know to do their jobs effectively is going to be super critical.
I think that's exactly right. I think I love AI as a tool.
Yeah.
I know there's some fear, right?
Sure.
But overall, it's technological advancement. It means that we are, as a provider, as a service provider, as somebody who makes things out in the world, you can give more to the client in less time. And I think we're all going to see that and benefit from it.
Yeah. And leaning into those changes, understanding that they're inevitable at this point. Pandora's box was opened. Here we are. Just embrace it and make sure you understand how it's going to impact your business. And finally, the new details have now been unveiled for Bentonville's planned STEM University on the former Walmart home office site. The 3-building campus is expected to include academic space, student housing, and a makerspace connected by public plazas and green space. Its focus on automation, logistics, biotechnology, and computing could strengthen Northwest Arkansas's long-term talent pipeline and innovation ecosystem. One of the things I like about this one is there are going to be graduates of this university that really specialize in niche things in some cases. The fact that it's paired up with a makerspace means that you get applied technology. And one of the things that's always amazed me about Northwest Arkansas is the entrepreneurial spirit. And so you combine that with a makerspace and these sorts of technology of areas of focus, there's going to be new businesses created in Northwest Arkansas that we can't even imagine. I mean, 10 years ago, we'd all heard of AI because somebody coined the phrase in a movie back in the 60s. We could have never guessed that we'd be doing the things we are now. Can you imagine what it's going to be like in the next 10 years as these graduates are graduating in our own backyard and really just spawning new business ideas that we can't even think of?
I am so excited, and it just speaks overall the opportunity and vision towards the future that you see in Northwest Arkansas. It looks gorgeous too.
Oh, it does. The renderings are amazing. Having worked in the old Walmart home office, there were days where I sat there and said, I work for the world's largest company and I can't see a window anywhere. Now, of course, the new campus is phenomenal, but what
Gorgeous.
they're going to turn this old campus into is going to be stunning. It really, really is. And I want to put out a plug here before we wrap up for the Vision 2050 that the Northwest Arkansas Council published back in mid-April. If you want to know kind of how we have the options we have to evolve in Northwest Arkansas over the next 15 to 20 years, take a look on their website. They've published this document. It's open to the public to read, and it really gives you some idea, especially as a small business owner, on where the growth is going to occur, some of the decisions that are going to be facing us as citizens of this community, things that we're going to need to vote on to make sure that we make the absolute best of all these wonderful opportunities coming. So again, a big plug for the Northwest Arkansas Council and that document. And with that, I think we're going to go ahead and wrap up. Mark, again, thanks for joining me for these last 2 episodes. This has been a ton of fun, but incredibly informative as well.
Well, thank you for having me. This has been a blast for me as well. And I'll come again sometime.
Yeah, absolutely. Yeah, we'll definitely have you back. Everyone, thank you for listening to Owner. If you're thinking about what's next for your business, remember, the best outcomes are built well before a deal ever happens.